Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Shankara Buildpro. Can we invest in this company, a building material company, or should we avoid it? So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Shankara Buildpro, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel and help you also ask me questions on a daily basis. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up after every 2-3 days. The watch list has around 70 stocks in which I put up buying ranges and targets for each stock and whether some stocks are in the hot list of buyers or not. Now about Shankara Buildpro, established in 1997, they provide tiles and specialty building materials. They also provide roof sheets, steel pipes and tubes. Had a stellar IPO and the stock went up very sharply post the IPO. It is serving the leading clients across India. If you look at the financials, then the company has come out with Q2 FY21 numbers. The sales have dropped by around 22%. The profit has dropped by around 40%. The financials are nothing great to write home about. Interest burden has increased. There's high promoter and institutional investment. A 9% free float is there, so that is a positive. Return on equity is of 6.9% and net profit margin is of 4%. So nothing great in the numbers, and that's why the stock is languishing around 350-360 rupees and not at a 52-week high as many other stocks in different sectors are. If you look at the performance, exceptional growth in FY18, the IPO listing was outstanding in 2017, say second half, and the stock went up till 2017 December, early part of 2018. But then it fell sharply, although it had a great potential as a business. The kind of products and building materials that Shankara Buildpro was producing and selling, it felt like that the company could be very big going forward, but it did not pan out like that. It has flattered to deceive, and last 2 quarters have been very disappointing. So June and September, and even last year numbers, say FY20 numbers, were nothing great, and that's why the stock has not moved that much over the past 2-3 years. So the reason for the stock to crash from higher levels, bad numbers since FY19. So from 2018 June onwards, the numbers have not gone up, and even with the lower base in June, the numbers in September are not that great. Slowing down of economy has hurt the business. So Indian economy has slowed down from 2018 January, not that it has slowed down in the last you can say 6-8 months. So you have to take that into account, and it looks like the kind of products that Shankara Buildpro is producing is the kind of product that goes into the kind of industries that we are talking about. Though those industries might not perform well for the next 6 months also. So housing development, etc., might not perform for the next 2 quarters, and even in that there are many competitors of Shankara Buildpro that are available, and people are going for that. There are many top quality companies in the tile segment than the one that I am talking about, and so the competition may eat out whatever market share that the company is having. The current shutdown and lockdown is further complicating the situation, and we are having localized shutdown even today in the market, and that is something that we have to be careful about, that if localized shutdown continue and happens going forward, we could face more trouble for companies which are second or third rung in their industry. Low cash and high on credit, so interest burden is also increasing, so that is also not a very positive sign. I would like you can say cash rich businesses which deal in cash and which have virtually no debt or low debt. So next 6 months looks difficult for the company, so I don't see the stock price moving a lot or sustaining above 400 a lot over the next 6 months as well. So what needs to be done? In my opinion, it's an avoid for the time being. Let the numbers improve. Let numbers go up sharply. Even if we were to buy the stocks, you can say higher, say 30% higher from current levels, it's okay. If the numbers come back, stock is in severe bear grip, even technically. So there are better consumption plays available. In fact, there are better stocks available in the same domain. The market leader being other companies, and you would know about it, the tile company that I'm talking about. We could look at those companies rather than looking at bath fittings or tile companies, rather than looking at this one, and have less than 5% exposure in such stocks. So this was a video on Shankara Buildpro. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.